I get the pleasure of sitting down with you, Andy Harris, for Lessons from Last Time. And you and I have done a ton of video together, just talking about the industry, doing classes for like continuing education, doing classes just to educate people. You're huge on education. So this is going to be a different video for us because we get to talk about just stuff.
Yeah.
So thanks for being here.
Yeah. Thanks for having me.
It's so interesting with you kind of figuring out where to go with this because you have been, you and I have only really known each other. We've known each other through the industry.
Yep.
I remember a Vegas trip that I was on. Your wife was with you. Mm-hmm. I think that's the first memory I have of really getting to know you on that trip. We got to hang out. It was at the MGM Grand.
It's probably one of the main events. There's multiple. I went to, there's so many Vegas events. It's hard to.
Well, you were kind of rising up through the mortgage industry back then. Mm-hmm. So let's just start mortgage and go back to the beginning for you. Yeah. You were and by the way, you're the first person to bring notes to a podcast. So I think that's so awesome.
Reminders. Yeah. So it was September 2002 when I got in the business. So my background was I was a personal trainer for Gold's Gym here, actually Portland. If you remember Nautilus Plus in Portland, they got the franchise Gold's Gym. We actually had the biggest chain of Gold's Gyms in the country in Portland.
Wow.
Which is kind of cool as far as using the franchise. And then Bally Total Fitness came in, bought Nautilus, and then I became operations manager for Bally. So my background was in fitness, but I always loved housing and real estate and numbers and stuff like that. And had a buddy of mine that was in the industry. I never worked with him, but he kind of convinced me to interview at a new company opening down the road from where our office was on Nimbus. If you remember Saxon Mortgage.
Yeah, of course.
Retail.
They had 6 on the back.
Yeah. Retail was America's money line. It was more like an alt-A, and of course I was green, so I didn't know what I was doing. But I interviewed with, and I'll name drop a few people here just because we're local, but remember Paul Thompson?
Of course.
So Paul Thompson he started that branch and had an interview with him, and it was funny because we had I swear 45 minutes we were eating food, and he took a call and just sat there when I was just waiting for him on the call. This is an interview, right? And luckily, he just, from my resume at the time, being younger and stuff, I just dived into it. And, my first year, Green was our top producer in the Western region, which I thought, hey, this is great, and I was learning the ins and outs of just, I guess the industry, but more, I thought I knew everything like everybody, especially when you start producing and doing big numbers. You think like, I know what I'm doing and I know the industry, and you just don't. So what's funny is the cubicle I had there on the other side of the wall was Benjamin Thompson.
No way.
Yeah. So Ben introduced me to Booth and Palmersheim, and that's where, I started then stepping out of the retail world saying, hey, I got to expand my horizon here and check out what else is out there. And it's hard for me because I was like Mr. Corporate. So I liked winning all the trips and I liked going on all this stuff and the recognition. And so I went fully independent and started, partnering with Bridgeport Lending at the time, which was an independent mortgage broker, obviously. And then I dove in. I had no clue what was going on. I mean, tons of wholesale lender rate sheets. I have no idea what's going on. Like, what is this, right? And it was funny because when I was with Saxon, I'd win, trips to Bahamas and Vegas and all these different things. There'd always be all of us retail guys and gals, and then there'd be these wholesale people. I'd never understand what it was. It was a smaller division of it. They said, well, yeah, we go to brokers' offices and we try to get loans from them. I'm like, well, what do you mean? And they'd kind of explain. I go, I still don't get it. Like, what do you mean? When I was in retail. And then they started showing their rate sheets to us. And I started being like, wait a minute, how do you get lower rates than what we get, right? Like, you're not even direct to the consumer. Like, well, these are what we offer brokers. And this is where I all started clicking. That's where I started looking into it further. So then I was with Bridgeport, partnered there for a few years. And it was funny because there was a stint in 2006 where I missed the corporate world, just because I was so used to it with the fitness background of, competition, recognition, the trips and all that stuff. So Countrywide, of all places, recruited me, which was funny. For 3 months. They did the same thing. They give you a bribe, some called bonus. I had an office in the Big Pink, 27th floor, beautiful, whatever. And when I was there, I've never done this in my career, but when I was there, those 3 months I had the most reckless, non-compliant. I mean, everything I saw I was very concerned by. And I just knew I have to get out of here. And I knew what I wanted to do. I said, number one, the corporate world in this industry is not for me. And so I resigned. I've never done that before. And I knew exactly that what I need to do is start my own thing. And so that's where in 2007, after that short experience, I basically did the business plan, started my company, when everyone thought we were crazy because we were basically going at what we saw coming. But seeing what happened at Countrywide, I always try to look ahead. I knew something was wrong. Same thing even when I was at Bally Total Fitness. Right after I left, the CEO resigned. They had falsified earnings to investors, and they went out of business too. So it's one of these things where I always look ahead to kind of see these things. I'm like, I need to control my own future.
You're the first to dive off the Titanic.
Yes.
When you see it's about to hit an iceberg.
100%. And I'm not part of that problem. I was just there.
Right.
Yeah.
Right. Yeah. You can make a ton of money on false claims act cases. So it's so interesting. So you came out of fitness, you get into mortgage, you like the trips, you thought that was super fun. Saxon's great. You go independent, much smaller company. And during that time, I mean, the average age at Bridgeport was probably 26, 27.
Yeah, probably. Yeah. A lot of younger people.
I mean, during that time, I was your rep. So that would have been 2000 to 2003. I was a rep. So I was 26 to 29. And I felt like everybody was my age.
Yeah, you were starting back then, Broker Knowledge Group.
Yeah, that was in 2003.
Yeah, and I remember some of the first CE, doing the pizzas across the street and all that. So that was a long time ago.
Yeah.
Yeah.
So you left there because you wanted that bigger company, that President's Club, that. Yeah,
I had this and I was doing fine there. I just had this inkling of maybe the grass is greener.
Right.
Because what was funny is this recruiter. At the time, I didn't know it was a recruiter. I thought it was some executive, with Countrywide. They were very good at convincing me. And I was young. I was young in the business. I didn't know any different. And so when they did that, it was funny because after I started, I was there maybe 3 or 4 weeks, and I contacted the same guy. And I realized he's not the level I thought he was on, because I thought they were like, hey, we know who we're recruiting here. We're going to use this person. And I realized I was put in a position that I even asked him, I go, am I overqualified for what I just stepped into? And he's like, probably. But he had already gotten paid. So it was one of these things where I was like, yeah, this is not, it helped me see what I kind of needed to see to solidify what I needed to do, which was start my own business, right? And that's where I stepped out and I said, okay, I have a different vision on this whole thing from about, and I mentioned this earlier, from about 2006 or 7, right around when I was starting the business, to 2009, I completely boycotted the industry because I was very disgusted by the subprime, the option arms, the subprime stuff, the behavior of the originators. And I knew something was going to break. I mean, it was just obvious something was wrong. And then we started seeing what started happening, in 2008 and leading up to it. I mean, there was a laundry list of warehouse lines being cut off, so many lenders going out of business, attrition, stuff way different from today, but similar in many ways economically. But, it was interesting starting a business during that time. I mean, we just dove straight in, and people thought we were nuts, but there, one thing about the mortgage space is it's a recruiting business first, mortgage second, and there's just a ton of rhetoric too. So I fought through the rhetoric, and it was an interesting time. Let's
clear this up for anybody that doesn't know mortgage, because a lot of our viewers and listeners don't know mortgage. During this time, just for some perspective, we had what's called the implodometer, which was mortgageimplode.com. And you had every day you could refresh the screen and see another company close down. So this is a time when, if you're in the industry, you're wondering, am I next? Or we're going to show up on that list at some point. I just wonder how long it's going to take. Countrywide, where you were for a short time, is in the process of, during the crash, they end up getting accidentally bought by Bank of America, who came out of a room with the treasury, and they're like, I guess we're buying Countrywide. Like, it wasn't an exciting thing for them. But all of that stuff is happening. You decide this is a great time for me to leave and control my destiny. Was it a little bit about control?
Yeah. I mean, so I always look ahead, and it was mainly, I didn't like the way, not just the ethics are in the industry. I didn't like the way that certain people operated their whole structure of their systems and business. But more importantly, I just felt that I needed to control. The corporate world wasn't my thing in this industry. I needed to control how I can be independently and really focus on my own independent opinions and data that I research on what's going to happen next. Because the biggest thing people fail to look at is not now, but really what's coming. And learning from the past is a problem, because we haven't done that clearly today. I can see that. But, during that period where I boycotted the industry, put my head down, fought through the financial crisis, it wasn't easy for anybody, especially as a startup. But we were blessed to be still, turning black during those periods of every single quarter. being a producing owner, that helped. That was a big, huge part of it. But
how many people were in your company in the beginning?
well, so it's funny. I found a little space in Lake Oswego, Oregon, and it was $12 a square foot, full service, in a daylight basement, so you could see outside or whatever. But I knew I needed to be cheap, nimble, keep all the overhead low. But we had, enough for 10, partition walled offices in there. And so I thought, I'll expand and I'll just do this and all, so it was, the mistake I made was never buy technology ahead of the need for it. So if you buy computers, they're going to be expired or out of, really what's the new technology within months, if not a year. So that was one mistake we made, where we kind of just set it all up ready. And then, some of the biggest problems people have is when it comes to humans in this business, and I learned this early on in starting my business, is the quality of the human originator is so much better than the quantity. And that's a huge mistake people are making today. The bigger mistake they're making today is a lot of them are not paying W-2, which is required. They're not, they're not paying comp the correct way. There's a lot of things where they're able to get this quantity of people because it's not done in a compliant manner. If it's done in a compliant manner, it's going to be it's going to be a significant liability, because you've got overhead tied to that. You've got, FICA, Social Security benefits if you're offering what you should be offering as an employer. So you just have to find quality people that can really build out a reputation and brand, but not a high number of people. It's the same going with production. This is a weird business where people, they go off this volume of transactions or people, but they're not looking at the actual math on it. Like, if you're not profitable, you're still winning, which doesn't make sense. Right. And it's like, no, you probably want to be profitable because that's what a business is. But it's how are you doing it, right? And so I think, I tell originators the same thing at their level. If you're not an owner and you're an originator, both owner and originator can't be controlled by their balance sheets. They need to be conservative and be able to be nimble. But with originators, the same thing. That's where you want the quantity of loans versus margin. Margin would be, less loans at more revenue. And that's where a lot of companies make mistakes too, is they're putting too much margin in their rate sheets, or they have too many non-producing staff they have to build into, because in mortgage, it's only through the margin and rate and fee, or, MSR value if they're servicing or whatever. So that's where you want the quantity, right? But so I would say early on what I learned was, and what a lot of people are learning today, is don't scale in a market that you don't see the future of, or you can't predict what's going to occur. Like 2018, 19, and 20 and 21, if people are scaling in those markets thinking that's normal, those people are the ones that are having a lot of problems today, because you can't sustain that.
Was it hard for you to not, ego wise, in that environment? It was about how many loan officers do you have, and how much production, all that stuff. Was it hard to not fall for that?
Not then, I think, because being a producer, any competition I have internally would be my own production, right? So I got rid of that a long time ago, and luckily we still don't have that today, where it's not about that. It's about just building your reputation and brand with a quality set of humans. I'm heavy on producing owners to then, set market share with less people. So I'm more about how can I penetrate more market share in a local community I'm targeting with less people, right? And, the independent broker has always been, it's been around for 50 years, right? I mean, it's small business, generally family owned, generally owner, producer. Things have twisted in recent years. People are trying to turn it into almost like a retail net branch, non-producing owners spread nationwide. That's not what brokering's about. People can claim to be brokers, but once you start pulling the data, it's like you're not brokering, But I think some perspective, when I did have that little boycott period, and I mentioned names, Craig Davis, he'll probably not remember this, but he had talked me into, I think it was 2008 or 9, he talked me into getting together with some other originators and other executives locally, saying, hey, there's good people out there, just get to know them or whatever. And I did, and I expanded, and I said, okay, now that the financial crisis is somewhat behind us, in 2009's here, who's involved with, obviously the Fed started talking about comp and all that stuff. They had to fix what just happened. Who's involved with influencing these people? And that's where it didn't make sense to me. So I started then getting involved with our local OAMP, which is the Oregon Association of Mortgage Professionals at the time. I think it's OMA now, which was tied to NAMB, the National Association of Mortgage Brokers. All the associations were member run, so they got a little broken up because, broker market share got to 7%. Yeah. A lot of that came from heavy retail recruiting and net branching and all the stuff we remember back then. but I got involved with the trade association literally without even being involved with being on the board at all. I just dove into president somehow. I don't know what happened there. But I was very passionate for the federal law. So what happened after, I think I served from 2010 to 12. So those heavy stuff we were dealing with on the CFPB and going through final comp reforms, I was diving into all of Dodd-Frank regulation, all the comp, all the anti-steering stuff. And then after that, my passion took me federal. So I went on the board as executive board member with NAMB and treasurer. I went to DC for multiple years to actually meet with the CFPB and Congress members to talk about, hey, how do we work this through and fix these unintended consequences? Because the way it was written was pretty terrible. Mm-hmm. So, yeah, it was a wild time, but I think I wouldn't change a thing, really. I think one thing that I look back on is, in 2009, I started writing for one of the national trade magazines every month. I did that for, almost a decade. And those about 3 I wrote for. But every 1 year or 2 years, the whole industry would just attack wholesale. Broker's dead, wholesale's dead. And I'm like, guys, you're not using any actual data. So I started writing about the future of wholesale and correspondent. And so I would predict what would happen every step of the way, even when Wells Fargo departed. I go, guys, the depositories they're not going to be here. This is about non-banks taking over this market for agency stuff, especially on the wholesale side. So the depositories we're going to see go by the wayside. It's just the way it is. They have too many other services they offered and board members and different things that, they don't have an appetite for, all the regulations coming down too, or the ability to compete because non-banks perform generally better. So yeah, looking back at all that stuff in the mortgage matrix I wrote about taking the red or blue pill, get out of this mindset of, working for one lender and being more independent. Anyways, I look back at that and that's what shaped my whole career, and where people thought I was nuts, but it all happened just because I was paying attention to the data,
Okay. So at this point we've lost all of our non-mortgage listeners. So yeah. We're just going to go deep here on mortgage. Because I know there will be people listening to this who know you. Mm-hmm. You've voluntarily come out to our office and shot video on the industry, where the industry should be, where it is, some of the problems in it. The first year you did that, we saw some comments in there that were like, oh, some people don't like this guy.
Oh yeah.
And then right at the same time, I kind of went back through Facebook, and something happened that I'd love for us to figure out. So you're huge broker side. You're an advocate for brokers. Mm-hmm. You've always been an advocate for brokers.
Yep.
You had massive support. You were leading in the industry. I mean, you just said it. You're flying to DC advocating for this industry. Mm-hmm. You're fighting for the right of those people that you work with, trying to get the message out, trying to change the lives of consumers by doing what you believe is best.
Correct.
What happened that half, if not all of the comments we saw were some brokers?
Well, even the term broker and banker is so misleading, because it's a lot of bankers use broker terms and brokers use it's just words, mm-hmm. right? I mean, you're either captive to an employee or employer as an employee, which is I work for this company, mm-hmm. or you're completely independent and you choose to stand as a fiduciary and force lenders to compete. So it's just in the wholesale channel. So the term brokers is so skewed now. So I have I have lots of groups that I support and brokers across the country. I've talked with hundreds for years. Lots of great companies. I love seeing the small businesses flurry. Those that are serving their communities and shopping and doing what they're supposed to actually broker. Mm-hmm. You're supposed to actually shop for your client. That's what you do. So a lot of things changed, especially after Dodd-Frank, because it changed now treating brokers, independent companies, different from everyone else. Mm-hmm. So, QM caps, anti-steering rules, all the things that go into what we do, even though it may have been unfair, basically stating that, we can't service release premium, we can't mm-hmm. track. You can track these things and treat it the same. But until that's all fair, there's a history for brokers that you can't ignore. The last 50 years did happen. So people today are trying to skew 50 years of history and trying to make their own definition of what a broker is. So you can't do that, because the people that are making those definitions are not originators, they're lenders, or they're people that are tied in with special interests that are not brokers. So you can't claim what a broker is when you're not a broker, right? You can't make that definition. So we've always had a voice in DC. We've always been involved. We've always had that. It depends on what members or what people step up to do, because it's like pulling teeth to get people to volunteer without any special interest tied to it, right? Because you take, as an independent originator, you take an oath, which when I stepped into this world, is I will not be influenced by anyone other than my client. Like, I will not be influenced by a lender. I will not work for a lender. I will not have them give me any control over anything I do. Every decision I make is going to be looking at every investor I can get my hands on, all primarily going to the same agency loans, and shopping for that borrower. That's the whole point. And what happened after comp reform is it fixed the comp, making it even more transparent. So as a broker company, for example, if you're paid by the lender, you have 40 rate sheets you're looking at. You cannot steer that borrower unless you're violating comp. So if you actually are looking at a universal pricing engine and doing that analysis, I brought this up on another topic. I pulled the data. I can't see any time I've been able to send more than 40% of loans to one lender. The market's it's all over the place with margin, and lenders come and go on price and everything else, but it's going to the same place. If it's a Fannie Mae 30-year loan, I don't care what logo you put in front of it, it's going to Fannie Mae. So like, that's what matters. Like, so my job as a broker, which is in my job title, is to represent the consumer between me, them, and Fannie Mae. The logos and sales mean nothing. Everyone has to execute. Everyone has to close on time. Like, that's not a perk, right? So that's the oath a broker takes. The problem with the new wave of people that maybe, because if you're ethical, you're a villain. If you're not within a cult or clique, you're a villain, right? Like, if you don't play the games, like, the brokers don't join cults and cliques. Like, independent people support each other as small businesses, but a small business never would tie themselves or their clients to something like special interest that can skew that, right? Like, they'll work together as colleagues, but once those people start twisting what the term of broker is, yeah, those people aren't going to like if I call them out, but that's what happens. Like, you're abusing a title that we, for many years, was abused. And then from like 2009 to 2018, the broker name was solid. Like, we had some of the best originators, the best companies doing business right by their clients. And then, unfortunately, the lack of federal enforcement and some of the stuff that happened after 18, especially with the rate crazy unicorn years of COVID, we're back in the wild, wild west, And
is that what happened? You called that out?
Oh,
and
100%.
People they weren't comfortable with that?
Oh, not at all. No. Well, here's the problem. So you go to meet people at these events, and I'd say, okay, you either intentionally don't understand Dodd-Frank and the changes, or unintentionally. So I would look at people on stage or people in groups and say, okay, there's a good ethical person that just doesn't know any better, and they're being influenced by people that are trying to control their narrative. They don't know it. Those are the people I'm trying to help. Then you have the unethical ones that don't care, or maybe even know what they're doing is wrong, but they're going to keep doing it because they'll either pay their way out of it, and they're making more money than they would if they were penalized, which is a lot of them. So what I would do is what got really bad is when I'd help the good people, they would fight back because it wasn't in that narrative, because it got so far in that direction. So it makes those people look like the villains that are literally trying to help, like, to avoid collateral damage, right? Because if things go the way they should, if they're, which that's the concern, is if people are held accountable for their actions, then other people can be harmed by the actions of those people if they're influenced by them, right? And there's a lot of things like that I see going on, where there's just a lot of really bad negative influences of people taking advantage of other people, and they just don't see it. The sad part too is I've had people even say, I do see it, it's terrible, I just don't care.
Wow.
And that's what disheartens me, because they're using our title to do all this, and it's not okay. So that's why I might have some people that, if you call them out for what they're doing, I have no self-gain doing that. It's a waste of my time.
Right.
So I have my head down, but then, and the reason why I get so much of it is because, like, I've had, broker groups on Facebook with thousands of people. I've got hundreds of people now. I cut, I think 2,000. I cut a bunch out, but we just set this precedent as, here's ethical requirements. You have to be compliant, share information, ideas, and everything. But all this data gets thrown at me. Look what these companies are doing. Look what this. Look at. I'm not just looking at this, just shocked. Like, how are people doing this? And again, they'll go through a state audit, and the state audit looks at none of this stuff because it's federal stuff. And it's like, what are we doing?
So, but you're not able to not say anything. Like we haven't talked about the Enneagram on this podcast at all, but you're an 8 on the Enneagram, which is like, I'm going to call stuff out and speak up because
I have to.
That's what I do.
Yeah.
How do you, and this is something personally, and I know for a lot of people out there, it's hard to see people, to see the amount of abuse you can take in social media. For me, it's hard when somebody says something or calls me out on social media. It's easy if they call me out on a fact as it is for you, because it's like, oh, bring it. Like your whole facts and data and math, like, yeah, I got that, right? But a personal attack, I've seen you be personally attacked. I saw one, you posted a comment and they just piled on you. And I was watching it like, stop. And I got involved. I actually commented on a couple and then they piled on me, and it was just straight bully mentality.
Oh yeah.
But none of it was fact-based. It was all just emotion and calling you names.
No, well, you got to remember, so social media is a mess. I mean, they're not just compliance and all the violations there with, what the consumer sees, but social media in the industry is a mess because it gives these people with no experience. A lot of these people are no experience. They're not originating. They don't like their background. It shows they've not performed well. They're going out and that gives them a platform of having like a voice, right? So everyone is put on the same like platform.
Right.
And you can't decipher, does this person know what they're talking about or not? And everyone is just like thrown into that. So what's funny about those scenarios is, number one, most of that stuff I hardly ever see. And I certainly don't see in person, because every time I've come anywhere near any of these people, they don't want to have those conversations with me at all. But more importantly, like, any that just got annoying, I would just block or whatever. Cause I'm like, hey, these people are too far gone. They're not part of the good humans that I'm trying to help. I'll just get rid of them. And they'll, if things work out the way they should, they'll make their own bed and deal with that later. But yeah, I haven't really, anytime it happens to me, I think I just blow it off because it doesn't bother me. But more importantly, I will respond in a factual way using data and everything else. But I just don't engage anymore with that stuff because it was such a mess. I was involved with some people early on that, you don't really start seeing things come out of them until you start saying, okay, now I'm seeing what the true colors are, which I was hoping that wasn't the case. And now it is the case. Now I need to disconnect and not support that, call out bad stuff when you see it. So, yeah, but good people are villains, that's just the way it is. I mean, this industry has always been, unfortunately, sometimes a greedy and dark industry at times. But there are some absolutely great people in this business. So the hard part is pulling out those good people from the bad. And I hate when I see good people get involved with bad stuff because they just don't know, and it's like, so if I remember early on when I was at these events and I go, clearly no one understands comp. Like they all got recruited over here from retail. They never dealt with this stuff. A lot of these people shouldn't be running businesses, but so I started doing these educational videos just about this stuff. But because it wasn't what they wanted to hear, they're going to go with the majority. Well, they have attorneys and they must. I go, yeah, but you're listening to someone that is not. This is your business. Like they don't set your policies. So if they tell you something's okay, or let's say it's a lender, or if it's just like another company you're working for, whatever it is, they may be protected on what you're doing. You might not be, right? So it really just depends. But it's a very weird business to me where people don't just step outside and independently think. And I just tell people, like, anytime you want to have an open conversation, it's like a retirement talk. Like, act like we all retired. We were not in the business anymore. So we can talk about stuff without selling it or without all the rhetoric, and just use common sense. Think about it. Like, and then people will start like understanding it more.
That's hard to do though. Like that's hard to get some people out of that. Yeah. Like as soon as you get into logic, it can be it's holding up a mirror for somebody. And
I understand it too, because there's a lot of egos. There's a lot of defensiveness. People get sensitive. They don't want to know they're doing something wrong or not understanding something. But I think that's really one of the things that is important today is like, and all of us that deal with, there's great real estate agents too. But we have always had that agent I've been doing this 35 years. I've never heard of an appraisal being required. That's how you're right. You're like, okay, well, like they don't want to be told, yes, you need an appraisal and you didn't know that. They'll be combative. It's the same idea. You could have someone in our industry for a long time that they don't want to be told they don't know something. And so they'll do whatever they can to throw that, to the side, or they'll surround themselves with yes men or yes women that tell them what they want to hear because it's fun and they can high five about it. Right. I'm just not the guy that's out there socializing for that reason. Like, I love socializing with colleagues that, we have the same, passions and stuff, but, not if you can't have, good people and bad people in the same environment in this business. It doesn't jive, but that's what's happened. They're all commingled now. And it's like, so I think that's, I'm just not a big fan of people being, dishonest to the public too. If they're saying, hey, I shop 100 lenders and they clearly don't, or they're saying they're a broker and they're just not behaving as one, like that's probably not fair to the consumer to believe that. So yeah, I mean, you just have to separate yourself as an originator, look at them as logos, and it's you can have great partnerships and respect for your lending partners, but you don't work for them. That's the whole fact of where it's at. So if there's influence otherwise, that's where the broker term has been a little bit abused.
Mm-hmm. So you feel like your success is largely due to your passion for the consumer? Like, I don't think anybody listening to this questions your passion for people getting the right scenario.
Yeah.
Right?
I mean, I think success as far as just overall business, I mean, I think it's, when I engage with a client, they know 100% that I'm right there with them, supporting them. I'm not, there's no sales stuff that way. I don't sell people into debt. I persistently educate, give them all the data up front. And I think people just know that from our reputation. Like, we're not, we put that first. Like, we're not part of anything other than just really looking at what's best for. We believe that if we create systems that's better for the consumer, it's better for the originator's engagement. So that's why we've always focused on making sure that the business is run by and for originators with consumers, because usually if both have a good experience, it's best for both. That's what we find as far as just ease and speed, and then just overall trying to, use competition to get the best pricing you can and all the different things. But it's, that's what's really been our focus and success, is really in looking ahead, trying to predict where things are going, which is interesting right now because we're, what is it, August 2023. So, we've had all these recent comments of, winter's coming 2023 because we're not through this yet. So it's definitely different from last time, but it's,
but you never strike me as scared.
No, I did this thing on fear and faith back in the financial crisis. So there's one of these articles I wrote, and it's how to use the F word in the mortgage industry. So you can use fear or faith. There's no in between, and you could tell who was using what, and the fear one was, hey, ladies and gentlemen, that 7% market share, yes, a lot of brokers needed to get out of the business, but the rest I saw people that had a business for 25 years, good business, profitable. They sold out to some retail net branch arm and made $0. So they gave up their entire business, and it completely ruined all the opportunities they would have moving forward. There was a thriving set of years after that. And they missed on all of that because they were so fearful of what they were being told by generally special interests like lenders. So if lenders start educating originators, again, they have one agenda, and that agenda is not serving the consumer. It's to get those originators to be under their wing, or whether it's employment or influence, and to get as much volume as they can as that lender, right? But if we all know Fannie, Freddie, Ginnie exist, now we disconnect from that lender, and that's what you do as a broker. Well, that's what's kind of the issue today and not happening. And so,
so they're run by fear. They move into that.
It's more right now. The fear is almost like a captivity. Like I'm captive and I'm reliant on something else. Like if you're an independent broker and you're reliant on a lender or reliant on a group, or like you can never be reliant. You can have support and you can have connections with colleagues and everything else, and always understanding the foundation of where it came from to make sure that it's not, out of line with your ethics and integrity. But yeah, talking about the F word again, faith and fear, you do have to be, you can't be naive. You want to look ahead too when it comes to things like where the market's heading. And like everyone's been saying, prepare for the worst, hope for the best, but you have to work for the best too. But yeah, I think a lot of that is some people out of fear. What I see today, which is different from then. So from then I saw a lot of people, get out net branch. People are jumping around a lot of companies right now. What I'm seeing now is people have given up there may be a shorter term business. So let's say they started their brokerage in 2018 or 2020 or whatever, and now they can't, because they're scaling off of a market that's not normal. they now realize now they're jumping in fear to under a wing of another company. The question is, what is the foundation and the ethical roots of those companies? And, I'm always one to talk about issues going on. I'll never mention company names, but those issues everyone is aware of, especially in the wholesale space. A lot of people in retail might not know what I'm talking about, which is fine. That's great. But yeah, it's definitely a faith or fear time right now.
What's the faith side then? What's that?
Faith is basically just having confidence and looking ahead and saying, okay, economically, where has the housing market been? Where are we at and why are we here? Right. And you have to use a little facts with faith, which is, we've never seen rates as low as they were. Right. So if you have, and everyone knows, everyone's got these rates in the 2s and 3s. Well, who wants to list their home and double, triple their rate payment, whatever it may be? Affordability is a problem right now. So I think having faith of it's not just rates, but rates are a huge part of it. Affordability is the issue. So having faith about what position you're in, meaning hopefully people manage their balance sheets and control everything to be prepared for change and not be crazy and they're cutting overhead or doing what they can to survive and thrive through it. But just knowing that we've been through these cycles before. If you look at every cycle, I remember there was a downtime. I can't remember what year it was exactly, but a lot of people had fear and jumped out. This is even after the financial crisis. And all of a sudden 2012 had this huge year. And these people were like, oh man, I got out of the industry and there's all these opportunities. There's been a lot of opportunities since then. But you really just have to look at it I've never seen in my career, literally like zero refis, right? It's usually like, hey, you always want to target purchase because refis are more reactionary, but that's always supplemented like economic shifts, right? Well, you don't have that supplement anymore. So that's one of those things where you have to kind of embrace that and be okay. If there's no refis, especially until rates drop, 100% purchase you're focused on. Well, now purchase is challenging because people have rates that are so low. You still have to look at the faith of market share, which we talked about before. There's the attrition that's happening in the industry like it did before needs to happen, unfortunately. So there are going to be a lot of people that are moving on. And those of us that have been here or that are newer, that have established something with a solid foundation, you should look at the history and cycles and know I have faith that things will turn around and that based off that, in addition to market share, we can thrive and do good things. So I think there's just a lot of unknowns,
Yeah. And is it for you, it's just a natural, you hang on the faith side? Like, do you find yourself slipping into fear every now and again?
Yeah, it's a default. Everyone does. It's more not, I wouldn't call it fear. It's more just acknowledging concern of like, okay, if you plan for the worst, what is the worst? What does that look like? What does it look like over time? It's a little different being an employee or an employer, it's much different. So if I ever look at it, I'm looking at it both ways because I have to look at it as an originator and as an employer. So it's really different. And a lot of employers I know, are going through a lot today because they have to figure out staffing. You have to figure out, I don't want to be overstaffed or understaffed. When is the cycle going to shift? A lot of it too is, people are, moving. It was such a profitable year. You see people moving those profits into, end of 2022 and 2023. The problem is you got to focus and make sure that your company's operating in the black and doing everything you can to get there. Because a lot of companies, for the first time ever, started seeing losses. The massive losses are the ones you want to be concerned about. More, just pertaining to what's sustainable and what companies, like if you're an originator, you got to be careful where you're going too, because you have to say like, if they're public or not, how do I know what their financials look like? Because I'm putting all my eggs in this basket.
Oh yeah.
And it's hard because I think there's just so much change still to come.
You could almost light up the implodometer again this year. We talked about that. Like, you don't know, you don't really control it if you're working for a company that you don't know much about, or you don't know much about how they're handling things. Your paycheck's dependent on them making payroll. Yeah. And that's tough. I love that you said, look at worst case scenarios. Because my parents are still alive. My wife's parents are still alive. Both sets of parents are still married. I've always been driven by not wanting to be homeless, right? Because as you're building your career, you're like, this job will help me not be homeless. And then with my parents, they've always had a house where, they've lived in a lot of houses. I had 20 houses by the time I was 20. So it's just moving constantly. My dad gets bored, and my mom's the only thing my dad ever traded in. Yeah. She's the only part of his life that he stayed, with for that long. But I always look when they move, I'm like, is there a place for us? because if anything happens to the business, if anything happens to my personal life, I know worst case scenario, they'll buy me groceries and I'll live there. Strangely, that math helps because you don't take risks if you think that the worst case scenario is catastrophe. But for most people, especially anybody in the mortgage business, you can look at it. And for most people in mortgage, they can go, okay, worst case, I've got buddies I can hang with. We interviewed a guy on the podcast who was homeless for a little while with his kids. And that was after the 08, 09 crash, loses everything. He still had a spot that he had friends that were able to get him back, and he was able to build out of it again. But I think doing that math is, for a lot of people, what gets them off the couch every day is like, okay, it's not going to be that bad.
Well, yeah. And like this year, I think a lot of people, looked ahead and didn't realize it was going to lag on this long.
Right.
It could lag on for quite a bit longer. We just don't know because, this is a weird inflationary time, but again, where so many people are locked into such low rates and payments and affordability, debt's at all time high. You've got auto payments at all time high. I mean, it's tough. Student loans are going to kick in a couple months. And I think it's just weird for, being an owner, just being like running a business. The weird one I see too is COVID changed the game forever. You're not just technology and AI and all the stuff that we have to look forward to, seeing how that impacts our business and real estate, but everything's changed from COVID. I mean, you have those who were ultra sensitive to under sensitive, and you had all the stuff you had to do, the mandates with the cities. But more importantly, I think with the states now adopting the work from home without being a licensed location, as long as you set up policies, procedures, compliance, that's an interesting thing that I see, because even well before the financial crisis, I remember going in colleagues' offices, these massive offices, and then it would be like 90% vacant, huge overhead. You'd see one originator on Facebook or whatever.
Right.
You're like, this is not going to be sustainable. But now with COVID, it's totally changed, where the majority do want to either work remotely, have some flexibility both ways. And I think that's going to change a lot of stuff too, just overall, because you have the self-driven people that no matter where they are, they're always going to be productive. And the others that need that camaraderie or the culture. And how do you, especially in such a heavy recruiting business, how do you really develop that culture when everyone's all over the place?
Yep.
And I think, that's another paradigm that I think that'll change a lot for the future of this business. And that's where it goes back to, you got to control these margins, because, whether it's cutting through overhead or, again, a lot of these certain roles that are not producing roles, you have to justify. It's a fine line right now, especially if this continues forward in the next year and beyond.
All right, let's finish with one last subject. You are driven, you're strategizing constantly. You never stop thinking about the present and the future. You never want to be caught not knowing something. You are vocal about, what you see as being ethical and right. All of these things. Is there a vacation, Andy? Is there like a pull the plug and just like be?
Yeah. So the one thing that's great, I guess, is that I sleep well at night. I never lose sleep. I never think about that stuff. I do love doing, especially we do a lot of staycations. Even from here, I'm going somewhere. So anytime I can get off, the nice thing about this industry is you can work anywhere, right?
Yeah.
So if I have to plug in and do quick letters, do whatever, I mean, it's nice, but no, I like disconnecting, There's sometimes where, when things get the way they've been, a lot of us are like, man, retirement kind of looks nice right now. But at the same time, it would probably be hard, a week into it, I'd probably be like, what am I doing? I can't just sit here. I love taking time off. I love taking vacations when I can.
And you could just detach. You could just...
Yeah, usually. It depends. I mean, it depends on where things are at. It depends on what I'm dealing with at the office or whatever. But yeah, sometimes I can. As long as I delegate. I think there's only been one time I fully detached, and it was actually, I think it was my 10-year wedding anniversary. We went to Belize.
Oh, nice.
So Ambergris Caye, a little peninsula there. And I remember it was like a 2-mile little drive with a golf cart, and we stayed at this resort. And I brought my laptop. I was ready to like work and all this. And I was looking at the people on the island and the kids, how happy they were, no shoes, everyone was just the slow island life, to the point where I'm like, what are we doing? What are we doing in the United States? It's just nuts. And I literally didn't look at my laptop for a week, and I had never done that before. So, I felt great. Yeah. And nothing, and of course, everything was fine, So I think we just have a weird way where it's the rat race. Social media just makes people nuts. I think, there's so much stuff that's shared on there that just not reality, you know, both personal and business. And I think it gets people in a weird spot, but I think you have to disconnect and take time off, and hopefully people don't take, you know, any work related stuff to them, whether they're on vacation or sleeping or whatever. Like that's, you know, what we do is important, but we have to be able to delegate that from our minds, and, you know, families first. Right?
Yep.
I mean, it's home loans, right?
Right.
Who
Totally.
cares?
Totally.
Like we're not here to like, no one cares about home loans. So it's family first. You got to find ways to balance that. And, you know, hopefully some people that haven't found that way find it, you know, long term.
Awesome. Andy, thank you so much for
Yeah,
sharing with me
my
today.
pleasure.
This was super cool.
Yeah.